Hello and welcome to this Forex Preview at XM.com. I'm Maria Basardis and joining me is investment analyst Christina Parthenidou. We'll be discussing China's upcoming trade data and the outlook for the Australian dollar. So Christina, we have trade data out of China this Friday after the US released its own numbers earlier this week. Are the data likely to reveal that one side has been winning the trade war so far?
Well, obviously there is no winner in this trade war game, and data from both countries have been repeatedly proving that more than a year now, especially the trade data. US and Chinese exports have been falling, imports have been declining too, adding more worries about consumption, and the US trade deficit with China didn't narrow as the US president desired, but rather remained unaffected. Friday's Chinese data won't make any difference, but continue to fall at a faster pace, suggesting that the longer the trade war gets, the worse it becomes from both sides and also for the rest of the world, despite monetary easing and fiscal stimulus by major economies.
I see. Now, on the positive side, we've heard a lot of encouraging news lately that a Phase 1 deal will be signed when the US president and Chinese leaders meet in the coming weeks. Do you think that an agreement at this stage is a done deal?
Well, the economic weakness in both countries suggests that no one is holding a negotiating advantage, and so both sides are likely to push efforts to finalize a preliminary trade agreement in the form of Phase 1 deal that Trump announced last month. Now, in order to make China to attend the event, Trump must show that he's willing to cancel some of his scheduled tariffs on December 15th and also roll back some of his previous tariffs. And I think that wouldn't be a big problem for the US president, because such a move would bring some relief to his voters in the agricultural sector and keep them loyal at in the 2020 elections. And at the same time, he would be able to keep pressuring China to follow through the agreement by keeping some tariffs in play.
Okay, and finally, turning to FX markets. Since markets are optimistic about a Phase 1 trade agreement, how might traders react to the Chinese trade data?
Well, definitely a worse than expected outcome wouldn't strengthen China's position, but neither would allow the US to act as it desires. So the odds for a Phase 1 deal wouldn't change much, and traders would likely reduce exposure in some risk-sensitive assets such as the Australian dollar because of the close relations between Australia and China. Now, in case the data come better than expected, the positive surprise should be big enough to improve China's position, and given the existing tariffs, this seems quite unlikely, but nevertheless, stronger trade data would be good news for Australia and the Australian dollar. So upside corrections in Aussie dollar can't be ruled out at the moment.
Christina, thanks so much for joining me, and thanks for watching at XM.com.